Welcome to episode 4 of the Who is This Loan Officer Person? A Disambiguation. First episode, we talked about types of institutions. We talked about types of lending in the second episode. In the third, we talked about licensing in the MLS. And today, after having buried the lead 3 times in a row, we're going to talk about what a loan officer is. All right, in general, an MLO or mortgage loan officer is a person that originates mortgage loan business, 1 to 4 family mortgage loan business for their institution or themselves. That institution could be a mortgage bank, it could be a regular money center bank like Wells Fargo, etc., or it could be a broker shop as small as 1 person. A national bank mortgage loan officer is a loan officer that's licensed through the registration only with the NMLS. That means they don't have to complete NMLS courses or state level courses. They instead are passing the continuing education courses required by their regulator, and that is the Office of the Comptroller of Currency and or the FDIC, etc. Now, the only difference between the licensing of a state level loan officer and the licensing of a national bank level loan officer is that the state level loan officer has to get their license in advance of originating business, whereas the national bank level loan officer only has to complete continuing education based upon who their regulator is. As far as the programs they can offer, they're only able to offer programs that are in their bank's own name. Unless their company says otherwise, these loan officers can originate business in all 50 states without having any additional licensing based upon the requirements of those individual states, and therefore are not required to participate in any state level regulation. All right, what are the pros and cons for working for a national bank? Well, at a national bank, you can originate anywhere in the United States as long as the bank lends in that state. Some companies don't choose to do mortgage lending in places like New York because the regulatory requirements are too cumbersome. That's just an example. There's no need to participate in the cumbersome NMLS registration process. So they don't need to take continuing education and prove it to the NMLS. They simply are registered through their bank, and their bank is subject to review by the bank's regulators to ensure that the loan officers are properly licensed in that they have the continuing education required. Often national banks are nationally known brands, so if you were to work for Wells Fargo, everybody in the country knows who Wells Fargo is, or Chase, or Citi, or Bank of America. And then they often have internal referral sources. So some loan officers will sit in a national bank and they will get referrals, say, from the tellers who would refer somebody interested in a mortgage over to them. The cons on this are they're limited in programs. They can't reach outside of the box and drag in a program for the odd customer, which other institutions can. Their guidelines are very restrictive. It's going to be based upon what either the GSEs, remember that's government-sponsored entities, or the national bank has in their portfolio programs, and they can't reach outside of that box. They are in the banks are not in the mortgage business. Now, while most, as I discussed previously, while most banks do mortgages and could be considered mortgage banks because they have mortgage operations, most of their income comes from other sources rather than mortgages. And so when it comes to, from a loan officer's perspective, when it comes to focusing on what we do, they're not as inclined to do that as, say, a mortgage bank or a broker. Often the national brands have bad names. So if you are a Wells Fargo customer and you've been fed up with them, or a Bank of America customer and you're fed up with them, you're not going to touch a Wells Fargo or Bank of America loan officer. That said, I must say that there are a lot of good loan officers at both of those institutions. And even if the institution is terrible, a good loan officer can get a good loan through any institution. So along with the mortgage banks maybe having a bad name and they're not being involved in the mortgage business as hardcore as perhaps a mortgage bank or a broker is, this is sort of goes along with the loan officer being subject to the whims of the bank. So if the bank wants to place more emphasis on credit cards or deposits than it does on mortgages, they might back off on mortgage operations staffing or tighten up their mortgage lending requirements, offer fewer exceptions, and that kind of thing. And they also have centralized operations. Now, most of us have centralized operations right now because of COVID and everybody working from home. But the thing about centralized operations is that if you're not in there with the same processor every time, whether or not it's centralized, if you're just sitting in a queue waiting for the random processor to pick it up, you can't provide people with a consistent level of service. And if you can't provide a consistent level of service, you can't get referrals. And that's what this business is all about. Finally, the last con that I came up with, I'm sure others exist, and I'm sure other pros exist as well. But the final con is that they're highly restrictive on their systems. You can't reach outside of the box and do some sort of marketing that isn't within, hasn't been directly approved by their compliance team. While most people do marketing and they remain compliant regardless of what their company says because they want to continue to keep their license, the reality is at one of these banks, you can't take your laptop anywhere. Often you can't solicit your own customers. You can't make your own marketing pieces, even if they are compliant. Sometimes these banks have a process by which top producing loan officers can send their marketing collateral into a compliance team for review. But most of the time, you're just kind of stuck with what they have and the tech they have. And you often can't even get your email on your phone, that kind of thing. All right, this has been episode 4.1 of Who is This Loan Officer Person? And what we discussed was what a national bank mortgage loan officer does and the pros and cons, etc. And in the next episode, we'll be talking about what mortgage bank loan officers do and the pros and cons of working for a mortgage bank. My name is Mike Collier. I've got 27 years of experience and I'd love to help you. My phone number is 650-288-8170. My email and website address are on the page here, so copy them down, leave a comment in the comment section, or email me back with any questions. I'm happy to help. You make it a great day.